Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the 2024 outlook for two promising growth stocks and why they could be excellent additions to your portfolio. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. The S&P 500 index has already shown impressive gains of almost 11% in 2024. Even better, the index is expected to climb higher, thanks to factors like cooling inflation, fueling rate cut speculation, and the widespread adoption of artificial intelligence (AI) technologies among many component companies. According to the independent London-based research firm Capital Economics, the S&P 500 could rise to 6,500 by the end of next year. That's an approximate 23% increase over the next 18 months or so. Given the current bull market enthusiasm fueled by AI and talks of rate cuts, investors should consider buying shares of C3 AI and ARM Holdings. These two growth stocks seem primed for impressive gains thanks to these catalysts. Let's dive into why these stocks could head higher in 2024 and beyond. First on the list, accelerating growth is C3 AI, ticker AI. Shares of C3 AI have underperformed the broader market this year, up just 6.4%. They were actually negative for the year until the May 29th release of its fiscal 2024 fourth quarter results for the 3 months ended April 30th, which sparked investor enthusiasm. C3 AI's quarterly performance was well received, pointing toward better times ahead. C3 AI specializes in enterprise AI software, a market expected to grow significantly in the long run. Precedence Research estimates that the enterprise AI market could grow from generating $7 billion in annual revenue in 2022 to $270 billion in 2032. This potential growth explains why C3.AI's software solutions are gaining solid traction. The company struck 191 agreements with clients in the previous fiscal year for its offerings, an increase of 52% from the previous year. These agreements indicate a healthier future for C3 AI and should help the company sustain its revenue growth acceleration. More specifically, C3 AI ended the previous quarter with a 20% year-over-year jump in revenue to $86.6 million. For comparison, the company's year-over-year revenue growth was 18%, 17%, and 11% in the preceding 3 quarters. C3 AI management forecasted $84 million to $89 million in revenue in the current quarter. That would be a 20% jump over the prior year period's figure at the midpoint. However, don't be surprised if C3 AI's revenue growth accelerates and lands at the higher end of its guidance range, or even exceeds that, as it has 123 pilot projects in progress across different industries. What's more, the midpoint of C3 AI's full-year revenue guidance of $370 million to $395 million points toward a 23% increase in its top line this year. Again, this would be a significant improvement over the 16% revenue growth the company reported in the latest fiscal year. Even better, analysts forecast the company's earnings to increase at an annual rate of 50% for the next 5 years. This isn't surprising considering the enormous opportunity C3 AI has in the AI software market. As such, investors should consider buying this growth stock, as it could soar higher this year and in the long run, as the growing adoption of AI software could help it maintain its momentum. Additionally, C3 AI's strategic partnerships and alliances with major technology firms further bolster its growth prospects. The company collaborates with industry giants like Microsoft and Amazon Web Services, enhancing its credibility and expanding its market reach. These partnerships enable C3 AI to integrate its AI solutions with leading cloud platforms, making it easier for enterprises to adopt and deploy AI technologies. Moreover, C3 AI's focus on continuous innovation is a key driver of its success. The company invests heavily in research and development to enhance its AI capabilities and introduce new products. This commitment to innovation ensures that C3 AI remains at the forefront of the rapidly evolving AI landscape. Another significant factor contributing to C3 AI's growth is its customer-centric approach. The company works closely with clients to understand their unique needs and tailor its AI solutions accordingly. This personalized approach has resulted in high customer satisfaction and retention rates, providing a stable revenue stream for C3 AI. Furthermore, C3 AI's financial health is worth noting. The company maintains a strong balance sheet with ample cash reserves, enabling it to weather economic uncertainties and invest in growth opportunities. This financial stability positions C3 AI to capitalize on the expanding AI market and deliver consistent returns to shareholders. In summary, C3 AI's robust growth trajectory, strategic partnerships, continuous innovation, customer-centric approach, and strong financial health make it an attractive investment opportunity. As the AI market continues to expand, C3 AI is well positioned to benefit from the growing demand for enterprise AI solutions. But before we proceed, here's a quick question for you. Is C3 AI stock the hidden gem of 2024? Drop your thoughts in the comments. Next, riding Riding the semiconductor wave is ARM Holdings, ticker ARM. ARM Holdings stock is soaring in 2024, up 67%, and the health of the semiconductor market indicates that the rise isn't likely to be temporary. One reason for this is the global popularity of ARM's chip architecture. Forbes estimates that more than 250 billion CPU chips, like those in smartphones, laptops, and tablets, in use today, were manufactured using ARM's intellectual property, IP. Just over 30 billion of those chips were shipped last year. A staggering 99% of mobile processors are manufactured using ARM's designs, and its share of the automotive market stands at just under 41%. ARM management highlighted in its fiscal 2024 fourth quarter earnings presentation that its overall share of the chip architecture market stands at 51%. This figure is set to move higher thanks to AI, as more companies sign up to use ARM's architecture to develop AI chips. This is translating into an improved backlog and faster revenue growth for ARM. The company expects its revenue to land between $3.8 billion and $4.1 billion in fiscal 2025. That would be a 22% increase at the midpoint over the previous fiscal year, when its top line increased 20%. However, the faster growth in ARM's remaining performance obligations, RPO, a metric that refers to the total value of the contracts that it has yet to fulfill, suggests that it could exceed its guidance. ARM's RPO increased an impressive 45% year over year to $2.5 billion in the previous quarter, thanks to an increase in the number of chip design agreements signed with customers. This probably explains why analysts expect its top line to land at the higher end of its guidance range in the current fiscal year, followed by robust growth over the next couple of years. This improvement in the company's top line is set to translate into stronger earnings growth as well, thanks to ARM's business model, which doesn't manufacture chips, but provides the architecture and IP to clients. Given the market's expectations for ARM's accelerated earnings growth in the future, there's a good chance that the stock will continue to gain value. Investors who haven't yet bought this red-hot growth stock might want to consider doing so before it climbs even higher. ARM Holdings also benefits from its strategic positioning within the semiconductor industry. The company's IP is critical to the development of advanced chips used in various applications, including smartphones, data centers, automotive systems, and IoT devices. This diversified exposure ensures that ARM is well positioned to capitalize on multiple growth drivers within the semiconductor sector. Additionally, ARM's focus on innovation and technological advancement is a significant competitive advantage. The company continually enhances its chip designs to improve performance, energy efficiency, and security. These advancements make ARM's IP highly sought after by leading semiconductor manufacturers, further driving demand for its products. ARM's commitment to sustainability and energy efficiency also resonates with the growing emphasis on environmental responsibility within the technology sector. The company's designs prioritize low power consumption, which is essential for battery-powered devices like smartphones and laptops. This focus on energy efficiency positions ARM favorably as more companies seek to reduce their environmental footprint. Moreover, ARM's extensive ecosystem of partners and developers is a key asset. The company's IP is supported by a vast network of software developers, hardware manufacturers, and industry collaborators. This ecosystem fosters innovation and accelerates the adoption of ARM's technology across various markets. In terms of financial performance, ARM Holdings has demonstrated consistent revenue growth and profitability. The company's strong financial position enables it to invest in research and development, expand its product portfolio, and pursue strategic acquisitions. These investments are crucial for maintaining its competitive edge and driving long-term growth. In conclusion, ARM Holdings' dominant market position, continuous innovation, diversified exposure, commitment to sustainability, and robust financial health make it a compelling investment. As the semiconductor market continues to grow, ARM is well positioned to benefit from increasing demand for advanced chip designs. To sum it up, let's take a quick look at some key figures for C3 AI and ARM Holdings. C3 AI, trading under the ticker AI, is currently priced at $332.29 with a market cap of $4 billion. The stock's 52-week range is between $20.23 and $48.87, indicating significant volatility but also potential for growth. It has a day's range of $31.55 to $33.11, showing recent trading activity, and boasts a solid gross margin of 60.63%, alongside revenues of $310.58 million. On the other hand, ARM Holdings, ticker ARM, is priced at $155.40 and has a substantially larger market cap of $150 billion. Its 52-week range spans from $46.50 to $164, reflecting its substantial market presence. The day's range for ARM Holdings is $145.20 to $155.85, with a notably high average volume of over 9 million. It outperforms in terms of gross margin at 92.73%, with impressive revenue figures of $3.23 billion. These metrics underscore the growth potential of both stocks, with C3AI showing strong revenue growth and strategic positioning in the AI market, while ARM Holdings demonstrates dominance in the semiconductor industry with robust financial health and expansive market reach. The S&P 500's projected rise and the potential tailwinds from AI and rate cuts make C3AI and ARM Holdings compelling growth stocks for 2024 and beyond. C3AI is positioned well in the burgeoning AI software market, while ARM Holdings stands to benefit from the growth in the semiconductor sector. Before we wrap up, we'd love to hear from you. Which stock do you think has the most potential for growth in 2024, C3AI or ARM Holdings? Let us know in the comments below. Thank you for watching Simple Investing Secrets. If you enjoyed this video and found it helpful, please give it a like and subscribe to our channel for more content. Remember, this video is for informational purposes only and does not constitute financial advice. Always do your research before making any investment decisions. See you in the next video.